All right. I'm good at picking a coin, but I'm never putting money on them. And in that regards, I don't make money. What strategy would you use if you know how to pick a coin, but you're too early? Oh, wow. Okay, so basically, you're finding the right coins, but you're not pulling the trigger, right? So I think it's kind of more of a confidence problem, or more of you're not. Yeah, I think you're finding the right coin, but you're not pulling the trigger. Well, I would say pull the trigger, right? But manage your risk, right? Because I think maybe you're not pulling the trigger because you see that you're finding them early, but you're seeing that there could be possible risk in them, right? So if you're managing the risk, so I'm assuming you're trading. So if you're trading, only put in what you're willing to lose, all right? So if you're trading, it's typically 1 to 2% of your portfolio. As Bill has kind of shared in past shows, only put in an amount that will help you sleep at night, right? So if you're going in with that attitude, if you're only putting in 1 to 2% of your portfolio, let's say 1%, why not pull the trigger, right? If it's something you've done research in and you believe in, pull the trigger, right? But if you're hesitant to pull the trigger, then maybe that means you should be doing more research, because hindsight is always 2020, right? Because how many times have you looked at something that you were on the fence on, then when it pumps, you tell yourself, man, I knew it was going to pump. Right? So that's kind of my take on that. Bill?
Okay, two angles. First angle is if you're great at picking stuff but not implementing the view, then don't even worry about the 1% or 2%. Just get something on your book. You'd be shocked how small your position can be to make you laser focus on timing and price movements. So, you know, it can be the smallest position possible, but it will help you with this potential pull the trigger problem. Now, there's another possibility with this coin, which I call the genius syndrome. Okay. Sometimes in legacy markets, I actually know people like this. They're so smart. They know what's going to be happening 6 months from now. The problem is the current environment is against them, right? So sometimes they'll have the view, they'll be right 6 months out, but they get hacked up or forced out in the next month before their event happens. So this person may be having that problem where he gets in and it's too early and he gets frustrated or it goes down. And that's why I'm recommending the smallest position possible, because what that allows you to do is the trigger pulling problem is over because you're in. Then once you're in, you'll laser focus. Then if it goes down or it starts moving, depending on what fits your personality, you will be able to move at that point, right?
Mhm.
So if you can't get involved, just get involved in a way that enhances your focus. And if you're a genius, the solution to that problem is actually just the opposite. Put the small position on and just sort of don't look at it every day. People look at stuff every day and then they talk themselves out of it. William Gann, famous trader whose work I use, he did not look at the market every day. He did not stare at the screen. He did not. So sometimes giving yourself a little breathing room after you've got your initial position can help you psychologically.
All right. Thank you, Bill. Great words.